Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to The Bigger Picture. Lots to talk about this week as we look at potential deals on the tariff front and a lot of earnings from some big tech names, among others. And helping us out this morning, we've got Carl Roeder. He is the Senior Financial Market Analyst at Capital.com. Carl, good morning. How's your weekend?
Good morning. It was fantastic. We've had another long weekend in Australia, so it's very restful.
That's right. Elections around the corner, just like in Singapore. So we've got a lot to look forward to. But let's start first with what's going on with the tariffs. Of course, Donald Trump has just marked 100 days in office. Sounds like a long time, but it really flies by. Walk us through what have been some of the biggest milestones and what the next 100 days could look like.
Well, I suppose you have to frame it, at least as far as I'm concerned, in an economic perspective and what it's meant for financial markets. And I think it's been a case of hope turning to despair, really, throughout the first 100 days of his administration, mostly because the Trump trade initially was all about, tax cuts and deregulation. The new Trump trade's all about, higher tariffs, trade wars. So there's kind of concerns now that Trump is actually going to be negative for the economy and negative for financial markets. Obviously, the last month or so has been the most significant. We've sort of seen a pivot from, clearly a view of trying to impose very high tariffs and run a very strong protectionist agenda, to backing away from that now and, really trying to sort of limit the damage of that, initial Liberation Day trade announcement. Now, we're in a position now where the economy is marked by uncertainty, and we're trying to gauge effectively the damage that this uncertainty has created for the economy and for markets.
Yeah, quite a lot of uncertainty, but it does look like some optimism around the corner. I'm not sure if we can say that right now because there are some signs he is dialing back and maybe reaching some deals. Is that something that might help at least markets in the short term?
If the deals come through, then without a doubt. I mean, initially, the fact that Trump has sort of pivoted effectively away from, what seems, I think, a very authentic attempt to sort of restructure US trade relations and reshape the US and global economy has turned into now, I guess, a sort of a post hoc rationalisation of that move as being part of some sort of broader negotiations to sort of achieve some other ends. I see it as nothing but a sort of a flip-flop or maybe a bit of a backflip. But the fact that, clearly there's an attempt from Trump to, reshape the narrative and position it as, wanting to sort of strike deals and being open to negotiations and to sort of eventually lower tariffs has been really good for markets. So if he continues to sort of push that narrative, that's going to be something that investors will buy into and will sort of help contribute to this recovery. The question becomes twofold. One is whether these deals actually materialise, because if you look at the Time interview last week, he said that he's been on the phone with President Xi, which the Chinese have said is absolutely false. And he said that he's already got 200 deals underway with different countries. No matter the fact that there aren't 200 countries in the world to do deals with, suggests that it might be a bit of a spurious thing. The other element now is that we're sort of waiting for the data to come through to actually assess the damage. So on the one hand, again, the narrative is better now, and markets will buy into that narrative as long as he's trying to sort of reshape it. But we'll have to eventually see deals being done, which at the moment doesn't seem like they're close just yet. And then there's also the data impact and actually how all this uncertainty is impacting fundamentals.
That's right, deal or no deal. But in the meantime, we will be getting earnings this week, and that's going to see the likes of Meta, Alphabet, or rather Apple and Amazon reporting. What are you looking out for? Because we have, by and large, been seeing a beat at least coming through from Alphabet last week.
Yeah, and the tech results have been better than expected so far. I mean, the earnings season to this point, despite fears that we might have started to see a bit of an earnings impact from just the uncertainty at the back end of last quarter related to tariffs, hasn't really materialised. So we're looking at a pretty solid, maybe double-digit earnings growth for the S&P 500. And yeah, so far the tech sector's actually outperformed expectations and delivered decent results. The thing that we're obviously looking for is guidance. We've observed already that the aggregate earnings estimate for the second quarter, so not this quarter, the next quarter coming up, has already been downgraded. And obviously so much hinges on what these tech companies say this week as to whether, we can start to sort of, we are actually seeing a downgrade cycle coming through, or whether, despite all of this uncertainty, despite the tariffs, that earnings are holding up okay and that investors can at least fall back on strong corporate fundamentals. I don't know what will materialise there. for me, a matter of just sort of waiting and seeing. But, obviously the concern here is that, as we go towards the back end of earnings season, even if this quarter's results are strong, that we'll be starting to see downgrades coming through off what was a fairly high base. Earnings growth was expected to be very, very strong this year. So, it sort of says that there's already a lot of good news, sort of baked into the price. So this week will basically be crucial, obviously because of macroeconomic data as well, but, really testing to what extent we can expect earnings to remain, earnings estimates to remain as robust as they've been up to this point.
Yeah, we have also been seeing a lot of companies withdrawing their guidance and just sounding the caution on what's to come. So I suppose it's still quite tough to call in terms of budgeting, hiring, and maybe even thinking about what to do in the short term. So that's something to look out for. Also, we'll be looking out for some data coming through. To what extent will this help to drive markets? Because it's, for example, the first quarter GDP numbers we'll be looking out for will be a reflection of what's passed. How much will they move markets?
I think it'll be significant because I think if you look at what tariffs do, is that they create some kind of stagflation or stagflation light scenario. So stagflation obviously being that, unemployment rises while prices rise. You could call a stagflation light scenario where growth weakens while, inflation maybe remains persistent, if not ticks up a little bit. You've got the GDP, you've got the NFPs, and you've got the core PCE all coming out this week. So effectively what markets are going to be looking for is, has there already been signs of the growth slowdown because of just the uncertainty of tariffs? Because, in that sort of first quarter, we saw an increase in tariffs, but not a material increase in tariffs, certainly not what's, compared to what's been applied at the start of this quarter, the start of April. And then we're also going to be looking at, this inflation data, which is expected to pick up to about 3% on the core PCE read. And that's crucial because it goes back to this point about, monetary policy from here. And, the questions that have, forced Trump to almost question the job of Jay Powell. And then also, obviously just more broadly, the Fed's ability to potentially provide a buffer for the economy as tariffs slow down economic growth by cutting interest rates. Clearly what Powell has said over the last few weeks is that, if prices start to tick up because of tariffs, even if it's only a one-off price shock, they're going to find it a little bit difficult to cut interest rates in that environment, out of fears of sort of untethering expectations. So it's about really gauging that kind of stagflationary mix and what tariffs have done to contribute to that stagflationary mix in the US economy. And if we do see growth slow down, we see a bad print on the non-farm payrolls, and if we do see PCE at 3%, that's just that markets, aren't really pricing in the real negatives of the scenario, and that's going to be negative for equities and the US dollar, US assets.
Yep, a balancing act between addressing the economy as well as inflation. So will the Fed move on rates and where will they lean towards? That's going to be partly answered to some degree with the data coming through this week. And we've been in conversation with Carl Roeder. He's the Senior Financial Market Analyst at Capital.com. Carl, thanks as always for your time and thanks for your help.
Have a great week.
All right, have a great week as well, Carl. Stay on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.